fundamental accounting assumptions. These are also accounting policies. Fundamental accounting assumptions are basically accounting policies. Very, very, very important accounting policies. Generally, every organization follows these accounting policies at the time of preparation and presentation of financial statements. All public also presume that every organization preparing financial statements by following of these fundamental accounting assumptions. Fundamental accounting assumptions are basically three: C, A, G. Consistency, accrual, going concern. Consistency means once a particular method of accounting policy adopted in the preparation and presentation of the financial statements, the same accounting policy shall be followed from year to year is called consistent. So normally organization shall not change frequently. Accounting policy is technically called consistency. Accrual. Income will be recognized. Income will be recognized whenever income is generated, irrespective of the time of the collection. Accrual means basically accounting methods dividing into three types: accrual basis, cash basis, hybrid basis. So every organization generally follow accrual basis. Public also presuming that every organization preparing accounts under accrual basis. Accrual means income will be recognized whenever it is generated by organization, irrespective of the time of the collection. Example, current year sales 25 lakh sales. Even though current year sales 25 lakh, collection is only 22 lakh, but still you can recognize 25 lakh. So forget about the time of the collection. Income will be recognized whenever it is generated. It is based on the accrual principle. Expenses will be recognized in the revenue statement whenever it is incurred, irrespective of the time of payment. Example, per month salary to staff 1 lakh. Complete 1 year salary is equal to 12 lakh. Even the total 12 lakh salary incurred, really so far cash paid to employee just 10 lakh. Still 2 lakh is outstanding. Even though cash paid is just 10 lakh, still we have to recognize 12 lakh salary expenditure in the current year profit and loss account. It is based on the accrual principle. Coming to going concern. Accounts preparation, financial statements preparation, dividing into two types. One is going concern, second one is the winding up concept. What is the meaning of the going concern? Organization will be continued for foreseeable future. Foreseeable future. Meaning is to the extent of time what you can visualize. Maximum, according to our accounting principles, 12 months. If our organization will be continued for minimum 12 months, definitely our organization will be treated as going concern. Financial statements generally will be followed, generally will be prepared based on the concept of the going concern. Opposite concept is called the winding up. If the organization decided either to close the organization or to curtail the level of the activity, at the time different way of the preparation and presentation of the financial statements will be. There are two types. One is going concern, second one is a winding up. Generally, organization will be viewed that this organization will be continued for the foreseeable future. Neither the intention nor the necessity to close the organization. In that ground, financial statements will be prepared is called the going concern. Definitely, financial statement, profit figure, loss figure, assets figure, liabilities figure, everything will be changed if the concept of going con winding has been changed. Suppose one machinery purchased for 10 lakh rupees. Life of the asset is 10 years. Definitely you are going to provide every year depreciation is equal to 1 lakh. This concept is according to the going concern, because we want to continue the organization for future. That's why we decided to provide the depreciation over the span of the 10 years. Asset value 10 lakh, first year depreciation 1 lakh, balance asset in the balance sheet is 9 lakh under the going concern assumption. In that case, it is irrelevant for the organization to link with the market value of the machinery. Market value is irrelevant because our intention is not to sell the asset, only to use the asset. We are going to run the organization, we are going to use the asset. That is the reason, based on the life of the asset, we are providing the depreciation, we are valuing the asset in the balance sheet in the going concern. Suppose, if we have decided to close the organization, even though life of the asset is 10 years, we want to close this organization within the short span of the time. In that case, the life of the asset is irrelevant, because closing, we are going to sell. What amount will be realized on the sale of the asset is main concentration in the case of the winding up concept. So finally accounting will be done either on the going concern or in the winding up. There will be some confusion to the public. To avoid that, all the organizations presumed that under going concern assumptions only accounts prepared. Right.